For welcoming the speaker and all the participants, may I request our chairman, CA Roy Varghese, please welcome.
Good afternoon, colleagues, friends, and seniors in profession. Welcome to Icai Ernakulam branch webinar on updates on standards on auditing. Friends, this is a very important topic. Your enthusiasm itself shows it. As you know it very well, wherever an independent examination of financial information is carried on for any entity, whether it is with a business motive or is it with the profit or not, whether the size of the entity is big or small, or even if the entity has any legal form, the standards on auditing is applicable as of now. The Auditing and Assurance Standards Board of India under the Council of Institute of Chartered Accountants of India have formulated these standards. These standards, in effect, will ensure that the financial statements are of high quality and are acceptable worldwide. And these are also in line with the international standards issued by the International Auditing and Assurance Board. I don't know how many of us know exactly the different types of standards. There are standards of quality control there, standards on auditing there, standards on review engagements there, standards on assurance engagements there, and standards on related services. So today we'll be taking up the standards on auditing. And as you know it very well, it is being presented by, or the discussion is being led by none other than our very learned and expert faculty, Jomon K.George. I am quite sure this session will be of very useful to each and every one of you, and your response is also expected in that. Few points, once again, I am repeating here. Please keep in mute position till the end. Even if your video is off, it is good for you because there will be more bandwidth and you will be getting a more clear audio if you keep your video in off position. And today, this is by attending this session, you will be eligible for 2 hours of structured. I tell you that unless you are logging in with the same email ID with which you registered, the system may not be identifying you, and even we may not be identifying you. Probably, we may not be able to admit you also because we may not be knowing who you are because if you are joining with a different email ID. So please see that in future also when you join with your same email ID in your registration and as well as when you're joining the web link. We will be having around 10 structured CPE credits programs. I mean, almost 5 programs will be coming. The details will be given to you by our secretary. I'm sure this session will be of very useful to you. So, if there is any slight problem, because yesterday night we had to disable that online registration because we need to send you the web link today morning. So we thought all of you will be registering in advance, but today morning there was a big rush for registration also. So in future also kindly see that you register in advance. Any comments, whether it is good or bad, expected from you, because we believe that it will help us to improve ourselves. So have a wonderful time here. Let me welcome each and every one of you first for join here today. And let me welcome our faculty, CA Jomon K.George, to this webinar. Now I am passing on the proceedings to the secretary, CA George Kelly. Please.
Thank you, Chairman CA Roy Varghese. So I am very happy and privileged to introduce today's speaker for an update on the standards on auditing. None other than our Jomon K.George, our regional RCM from Cochin. He does not require separate introduction, in fact, but the custom demands. He is a fellow member of our own institute, everyone knows, and he is the immediate past chairman of SIRC. And he was the chairman of Icai Ernakulam in 2002-3. He is the founder and managing partner of JVR and Associates. And he is a faculty for auditing at ICAI, and he has taught more than 10,000 CA students so far. He was a member of the Auditing and Assurance Standards Board of ICAI, and he was the past president of Rotary Club of Cochin Central, and he is a member in various social clubs in and around Kerala, and he is the honorable treasurer Kerala Management Association, and he is also member advisory board to St. Teresa's College, Ernakulam. With these words, I introduce before you our speaker for the day, and I also invite Sir Jomon K.George for his presentation. Over to you, sir.
Thank you, my dear friend Jose, Dynamic Chairman of the branch, Sir Roy Varghese, Secretary Jose, other Managing Committee members, respected senior members and colleagues. It's really nice to have an online Zoom meeting with so many of you this afternoon. This has become the new order. With the COVID outbreak, there are a lot of new normals. Online meetings and online learning has become the order of the day, one of the new normals. Working from home has become a new normal. Companies like TCS, India's largest IT company, having benefited from the advantages in output on working from home, eventually are planning to have 75% of their workforce, which is presently around 450,000 workers, they have working from home. Only 25% will be working from offices. We have also in the last 2 months adapted to new technologies, and many of us are able to work from home. There are some security, data security concerns. Those protocols are being set right. So this is the new normals, and one more new normal which we are seeing is the emerging economy would be a gig economy, gig economy, wherein it will be a last minute scramble and organization of resources, even for structured jobs. We are used to having catering service companies getting young boys and girls to serve for a dinner or a lunch or a party where they are called, informed the previous evening, and they do the service for just 2 hours. This is one of the examples of a gig economy. Those are the new normals which are emerging. Extremely happy that Ernakulam branch has taken the initiative of organizing a series of online meetings, Zoom meetings as I call now. Google has also come out with Google meetings now. Institute, in fact, centrally, we are discussing with the Babu sir the other day. The online meetings are much more effective. All the committees of the Institute has come out with a lot of publications for the in the wake of the COVID outbreak, which we are discussing during the course of this presentation. And the regional council, as well as the branches, many of the branches are very actively conducting a lot of programs. Distractions are less, and therefore more of learning is happening through the net, and broadband connectivity, good connectivity and audio systems are essential to have good reception for these programs. Chairman has given a lot of technology tips. So Chairman Roy sir has become a tech-savvy chairman now. It is the need of the hour. And so this is the backdrop in which we are meeting today. As we go by in the presentation, we would touch upon some of the basics and then try to cover the practice-based standards. Some of them are theoretical standards. Some of them are practice-based standards. And also after every standard, I would like to highlight what is the action point. If we are not complying with a particular standard during the course of this 1.5 hours presentation, we feel that, or if we are convinced that one standard is not being practiced or observed, then it has to be noted down that the action point would be shared. With that, let me start sharing the screen. Is the screen visible, Chairman?
Not at.
Should be visible now?
No, not yet.
No.
No, screen is not shared?
No.
Just 20 audits, as rightly introduced by the Chairman. So let's touch upon some of the basics, which are very, very important. The question when we talk about auditing standards is that what is an audit? Why do we do audits and how to do an audit? What everyone knows, the Chairman has defined an independent examination. Independent is very important. Independence is being questioned in many of the forums now, particularly with a lot of corporate failures and audit failures happening. Whether it is an ILNFS or Yes Bank, we have a lot of unpleasant stories. So that independent examination of financial information with a view to expressing an opinion on them. And this opinion helps to determine whether the financial statements give a true and fair view of the financial information. Today we have the P&L, the balance sheet, and cash flow statements have also belatedly become part of general purpose financial statements. And why this exercise called audit is to ensure that the financial statements used by a multiplicity of users, take the case of a large listed company like Infosys or Reliance, where it is being used by a multiplicity of users, from governments to regulators to bankers to all stakeholders, researchers, analysts, academicians, and so on. So they have to be reliable. So statements prepared by the management are subjected to an independent evaluation by a chartered accountant, a trained chartered accountant who is the auditor of the company. So that is a what and why. How is an audit to be done? This is where we have to delve back a little bit into the history, because when the institute was set up in 1949, and then in the earlier days of doing audits, it was mostly custom-based audits. So it was felt that there has to be a uniform code of literature to guide the chartered accountants in discharging their audit function. How to plan an audit, how to document an audit, what is the evidence that should be collected, and so on. We'll see all these standards as we go by. So standards on auditing, standards on quality control are also there. The new classifications we'll see. So these standards on auditing are instruction manuals, instructions as to how an audit has to be discharged properly. Today, if we are not able to do full justice to it, because many of us are not fully aware of the standards in auditing, the changing sphere, the very dynamic changes that are happening in the sphere of standards in auditing and accounting standards. So with that, let me quickly touch upon a very basic thing of the audit process. Why I'm doing this is because in many places we see that auditing has been reduced to compilation of financial statements. The client's accountant or the client sometimes gives, sometimes sends a trial balance, from out of which a statement is prepared. We are now talking about company audit primarily, and therefore to comply with the balance sheet requirement, reporting requirements of Schedule 3, some accounting standard compliance. There also the level of compliance is dismally poor. I'll give you some statistics or information from the FRRB, Financial Reporting Review Board, a little later. So the audit process is, I'm giving some of the basics for seniors who are attending this meeting, may sound to be very elementary, but let us ask, every one of us ask frankly whether all these good practices are being done. Opening balance checking of opening balances, there is a separate standard. Particularly when we do an audit for the first time, there's a separate standard to make sure that the opening balance have been brought forward properly, and what is shown in their balances are maintainable. They are worthy of being carried in the books of accounts. Another thing which normally, at least in larger audits, we should do is the internal control evaluation. One is also reminded of a separate reporting requirement for large companies on the internal financial controls, which we are doing in the auditor's report. Internal control evaluation, and when we do the evaluation, if there are shortcomings, we are essentially required to communicate with those charged with governance and the management. Vouching, the checking of underlying records, analysis of ledgers. I know I have heard that maybe it was 20 years back, a very senior partner, he is no more with the senior partner of a well-established firm, used to insist on having photocopies of major ledger accounts with the closing balances duly stamped. This will sound very old-fashioned, but I recall what my dear friend Ganesh Balakrishnan, who is the managing partner of Deloitte in Hyderabad, He said, Jomon, there is now a lot of charm in what our seniors said. I think with technology going at this speed, I think that we have to reinvent some of the old practices. Ledger analysis is very, very important. Verification of assets and liabilities. Frankly, how many of us attend physical verification? This is a mandatory requirement if you look at SF 501. Physical verification of assets, inventories, investments, if they're physically available. Most of them are today in DMAT form. So the DMAT statement, verifying a lot of verifications, physical cash verification, inventory verification, most importantly. We see large amount of non-existent obsolete inventory sitting in company balance sheets these days when we do investigation and that kind of assignments. Another aspect which is very important is the financial statements, if at all it's prepared by the management. We have a conduit called the trial balance from the underlying books of accounts. During the course of an audit, a lot of closing entries may get passed. And then there's trial balance 1, 2, 3, 4, like that it goes. And finally, there's a trial balance based on which financial statements are prepared. They have to be essentially part of our documentation. Accounting standard compliance. If you look at the financial statements of companies, particularly smaller companies, if we see that large amount of AS compliance, non-compliance with accounting standards. The FRRV findings, if we prepare a pie chart, found that about 70% of the non-compliances are in respect of accounting standards. Very sketchy notes on accounts. 2-3 years back, when we did the analysis of a balance sheet prepared by a very senior firm based in Bangalore, the partner 30 years plus experience, there's no mention about AS 22. There were timing difference, outstanding timing differences. Deferred taxation was not referred to at all. A company with a turnover of 80 to 90 crores, we were having a one single page notes on accounts. Deferred taxation was not there. Gratuity provisions were not made at all. And they said it is accounted on cash basis. They used a term called pay as they go basis. There's no basis according to me like that. Another aspect is a Schedule 3 compliance. When it comes to the company audits, it's always substance over form, but the legal form also carries its value. Because in the auditor's report, we are very assertively saying that the financial statements give the information so in the manner required by the Companies Act 2030. One more thing which we have totally forgotten to do these days is analytical review. Intra-firm comparison and inter-firm comparison. We may have same clients from the industry, or industry averages are today just a matter of just pulling down from the net. Google helps us to do that. So analytical reviews. And lastly, very importantly, Caro points, we need to inform reporting. Quickly, I was seeing some of the reports. So in the audit process, these are the broad things which we do. Caro today, let me also tell you, some of you have thought that Caro 2020 has fallen in place. No, we are still under Caro 2016. Even before the COVID outbreak, Caro 2020 applicability deferred to March 2021 financial year. Now we are talking everything specific to the audit of 1920. Some of us have finished some of the listed company audits. Others are in the process. So as far as our small and medium companies are concerned, we are on the threshold of audit season. So therefore, as a timing wise, I think we are what the branch has done, inviting me to do this presentation, is perfectly timed. So with that, quickly on the evolution and auditing standards, how they've evolved. The Accounting Auditing Practices Committee was set up in 1982. Accounting standards we started in 1977. APC was set up in 1982 and was issuing SAPs, Standard Auditing Practices. It was renamed in 2002 and as Auditing and Assurance Standards Board. With that, SAPs were renamed as Auditing and Assurance Standards Board. I was introduced, Jose introduced me as a member of Auditing and Assurance Standards Board. That was in 2005 when Manoharan sir became the vice president. He co-opted me to the Auditing and Assurance Standards Board, and it was a great learning experience. And I think I could contribute also. 11 meetings we had, 10 in Delhi and 1 in Mumbai. And the last meeting was chaired by Graham Ward, the then IFAC president. So we had a lot of interaction. Why I'm saying this is here that a lot of work is being done in AASB. A lot of publications are coming. When the list of institute publications are rolled out a little later, one would really be surprised so many are there. Am I reading this? Am I responding? Is there a reciprocity from my side to the institute's publications? But then after all this, they looked around and found that these practices are not enough. Therefore, a new preface was issued in 2008. So if someone is seriously learning to apply or for academics, standards and auditing practices, I strongly suggest that this is a starting point. The new preface to auditing and quality control standards issued in 2008. In the result, as chairman said, there's a new classification. I don't know how those red lines came onto the screen. Is it from the host side, Raju or someone? I don't know. How can that happen? Because it's not there in my slides. Okay, the new classification is that standards are broadly classified into standards on quality control and engagement standards. As far as SQ audit, since we need to spend more time on engagement standards, I'll be a little brief here. Quality in an audit will happen. The crux of the standard is quality will happen only through two modes. One is that there should be a mindset to say that what I am signing, what I'm putting my hand or laying my hand on are reliable and they can be sent out, particularly in the case of public interest entities. Today, public interest entities would also include corporates with large borrowings. We have Vijay Malayas and Nirav Modis, and therefore, 12 lakh crores, 12 trillion was the official figure of bad loans in the Indian banking system. Some experts say that it is almost double. The real picture is almost double that. With COVID, probably it will go even. So the balance sheets prepared by chartered accountants are engaged, are relied upon by the bankers, and therefore there's a huge need to have quality in all that we do. So there has to be a quality mission statement. And SQC1, the crux of that is this: with this mindset in place, you say that, yes, I will have good processes in discharging an audit function. Good processes in discharging an audit function, or in very brief terms, if I say, I will discharge all my audits in strict compliance with standards and auditing. That is the process part of it. Once the process is there, then we also need to have good people around. Today, getting articles is not difficult. Well-meaning firms, we have a queue of students waiting for registering articles. So be choosy, be careful in selecting them. But then most important, in the earlier days, we need to spend time on training them. How many are training sessions for articles? Or are they sent out to an audit from day one with some kind of a blanket instruction, go do the audit? This cannot happen. So with that, the output, then again, you'll have to reinvent and then spend a lot of time. So SQC1 is primarily about having a mindset, a mission, or on having quality audits, then putting right processes in place, which will unfold. That is what essays are all about. As I did mention earlier, how do we do the audit? Not why, how do we do the audit? And engagement standards are further broadly classified into essays, standards on auditing, standards on review engagements, standard on assurance engagements, standards on related services. Essays are for audits. SRAs are for review engagements. Many of us do limited review, quarterly limited review for listed companies today. So SRAs have to be complied with there. Assurance engagements are, other than audits, the audit and assurance service, other assurance certifications that we do, for example. Another thing is SA 3400, time permits, I would like to spend some time on. This is about, prospective financial information. Many of our members sign projected balance sheets without attaching anything. They just attach, put a seal and sign. It is actually prohibited. Very dangerous also in the present day context. Last is this service standard on related services. Related services, before going into that, let me put a caveat, a word of caution here. Engagements to compile financial information where we are not doing an audit, or rather where we are not required to do an audit, is a related service. We have n number of non-corporate clients with the turnover limits less than the tax audit level. When they approach us, when they are our client, what kind of a client are they? I have mentioned this in many of our seminars where we are saying that we are just signing, saying that prepared from the books of account and so on. Excuse me. Fine. So related service is that where engagement to compile financial information. Today, many of us are still signing prepared from the books of accounts produced before us and on the basis of information given to us. Another a little more careful signing is the above financial statements are not audited by us, which are not audited by us have been compiled from the books of accounts, etc. These are all prohibited. SRS 4410 tells us how to deal with engagements to compile financial information. The only way to sign is that refer compilation report. And also, mind you, the compilation report is captioned as not as auditor's report, accountant's report on unaudited financial statements. It's very important. So this is how it is. With that, we will now primarily, as the chairman suggested, move on to the major practice-based standards and auditing. But before that, quickly, why should we comply with these standards? To expedite audits effectively in accordance with the gaps. Here, gaps are generally accepted auditing practices, not accounting principles. But many people have started in lighter vein using an expansion for gaps, games accountants always play. To utilize resources effectively, the resources at the time we have, the students we have, the staff we have, then our own faculties which we bring to the work table in an audit. To guide, direct and supervise assistants properly. If you have an audit program, for example, which we are going to discuss, audit program, for example, then you don't have to give detailed instructions every time. Go do the audit like a textbook case with reference to the audit program. To ensure quality control in an audit, standards have to be mentioned, because I did mention SQC1 talks about the need for complying with standards and auditing. To disprove charges of negligence. Our country is not yet very litigant in terms of audit failures. But I know you, I'm sure you know the stories in the West where multi-million dollar charges are leveled against many of the firms. Some of them end up paying huge penalties for negligence and doing audits passively. One more thing is the peer review. And I have some recent information for you. Some of you may be peer reviewers. The peer review board is doing a complete overhaul of the process. Our firm has recently been peer reviewed and we got the certificate. And it is there, the institute says that it's a hallmark of excellence. It is proof that the processes of the firm, audit processes of the firm, practices have reached a certain maturity level. Process maturity has been attained. But unfortunately, the fact remains that many of the peer reviewers are not equipped. In the result, the whole process is not serving the purpose. So peer review now today, to be a peer reviewer, you have to pass an examination. The peer review board is going to come out with an examination, which means that you have dates regularly. People in academics are forced to, but then others who are very rarely read. We spend a lot of time on social media and trivial matters, but members in practice have to continuously be adept and abreast about the latest developments, which is not happening the way it should be. So peer review is also, unless we have good systems of complying with standards and auditing, of documentation, of planning an audit, etc., we will not pass the exam, the peer review. If we fail in a peer review, it will be a shame for us, so let's not have. But leave all that. The most important reason is the next slide. Companies Act 2013 has made auditing standards mandatory under the Companies Act. Till this came, it was only a dictum of the institute on its members, saying that, hey, look here, I am issuing these standards, we are issuing the standards, Icai issues these standards. If you're not complying with, we will, we can probably take you to task under the disciplinary proceedings of the institute. Today, the scene is completely different. Even with that, 7 years have passed, but we are still very passive about standards and auditing. The findings of FRRB suggest that it is that a very scant regard is given to standards and auditing. Now, let us also be reminded that NFRA is gaining a strong footing. NFRA can have a direct disciplinary recourse onto the members of the 3 professional institutes, CS, CMAs, and company secretaries, without going to the disciplinary mechanism of the institute. And we thought 132 of the Companies Act would never be notified. But the Prime Minister, in one of his 3-4 years back, on the July 1st speech, gave an indication that he's not happy with the way the profession is doing. There was some misinformation, but later he also said that your signature is more important than my signature. Because the government depends so much on the validation done by chartered accountants. So if it has to reach the real beneficiary, our signature carries a lot of importance there. So here, this is mandatory under the Act, so we cannot be caught responsible under disciplinary proceedings of DC of ICI or NFR. One has to be careful. Look at this very unfortunate remark made by the MCA secretary. This happened about a year back. Sinjati Srinivas made this remark that we do not expect the auditors to find the needle in a haystack, but they must see the elephant in the room. Is this really a knock on the back of our heads? Shameful for the profession. So this is a state of affairs where we today sit together. We don't sit together. We share a screen, sit in different places, hooked on to the Zoom meeting and saying that let us make a kind of a resolve, a fresh resolve to make sure that our processes would see at least the elephant in the room, if not the needle in the haystack. With that introduction, let me move on to some of the practice-based standards. SA 200 is a takeoff standard, which is very introductory in nature. Overall objectives of the independent auditor and conduct of an audit in accordance with SAS. This talks about the basics: integrity, independence, confidentiality of information is very important. Today, in the fully wired world where we are sharing work for working from home and all that, data security, confidentiality of client information is a concern. And it also talks about how to plan an audit, how to document, how to collect evidence, how to evaluate evidence, how materiality has to be set, how this has to be communicated with the management. It talks also about a detached attachment with the management and reminds us that the auditor is a judge on financial information and cannot be an advocate of the management. And lastly, and most importantly, after all the years, the Institute in SA 200 has used the term professional skepticism. And today in the COVID publications of the Institute, 6 of them, everywhere they highlight that in the given context that we are in today, with the unprecedented developments which have happened today, professional skepticism has to be amplified. So SA 200 is where the first time after so many years, 2008 when it was revised and the new preface came, SA 200 said, exercise professional skepticism. What is this? This is not taking people and explanations for granted in an audit situation. And also saying that, Sarji, we trust you, we believe you, but still we would like to verify. We have seen when we ask these questions, I remember during my audit experience as a student and later as a younger chartered accountant today, all the time we ask for certain things, they say, all this has been done. But is there a report, physical verification report? No, reports are not prepared. Do you have an internal audit? Yes, we have an internal audit report. We have an internal audit, monthly internal audit, done by maybe an external firm or maybe internal team. Can I have a look at your internal audit reports? Sir, they're not giving any reports. So the reliability is completely gone. So professional skepticism in SA 200 is this. Therefore, the action point in SA 200 is exercise more skepticism and follow the standard integrity, independence, proper planning of the audit, and making sure that, as I mentioned earlier, the mindset that I would discharge all my audits in compliance with the standards on auditing. SA 200 talks about agreeing the terms of audit engagement. The moment somebody talks about an audit and a team is sent or audit is taken up. But essentially, before taking up an audit, we have to have a discussion with the management and the terms of audit engagement, though the scope is largely designed and defined by the applicable statute, which is the Companies Act 2013 and the pronouncements. There is a form, SA 210 has got as an appendix to it what is known as a letter of engagement. We use the term LOE in our office. No audit starts without getting a signed LOE from somebody responsible, not just by an accountant. And here, let me also tell you something that the influx and the influence of non-chartered accountants, tax practitioners, STPs, ITPs, we should try to reduce. In our office, it's a complete no entry to those guys. They're not professionals. They are the people who spoil the market. They are the people who, refuse to have a direct contact between the client. But the high time that we stopped all those unhealthy practices and they should be out of office. Probably some work could be GST-related return filing or lower-end work could be outsourced to them. But then we should have a direct connect with these people, management, and a letter of engagement. So so action point here is, before I start an audit, I will get a letter of engagement signed. Moving on, my dear friends, SA 220. Though we have a separate standard on SQC, in SA also we have standard on quality control for audit work. Since I have mentioned about the crux of, already discussed the crux of SQC1, it is the same here. Have good processes, mindset, and good people in our team. Train them, instruct them properly, review their work properly. It is not that they're sent for an audit and they come back after 1 month and do it. Online today, daily reporting is possible. Use something like the OneDrive and all that. It's quite possible. We should leverage substantially more on technology. So that's how we bring about quality control. 230 audit documentation. Audit files. The new standard SA 230 does not have the requirement of having a permanent file and a current file. We use the term main file and working notes file in our office. Still, even in this technologically advanced world, many of us still have a lot of paper. So though it is not mandated by the standard, I still suggest that let us all continue to have a separate set of permanent file, documents of lasting, enduring importance, and also a current file for every year, a working notes file for every year. Quick reference is possible. Store them separately. But then today we also see that it need not be the bulk size of the thickness of the file is coming down, because many of our work is done. We had recently had an audit where everything could be done online, because they are in QuickBooks and they are everything, even the voucher is scanned and attached to. So online we could do, and we didn't have anything missing like a physical audit. We could do, everything was possible. So documentation, everything need not be written. Today, a student comes and we ask for the working papers. You are shown an Excel file or the laptop as you, sir, I've already shared it in the client folder. Can you have a look at it? We look at the Excel and then make a note of things. A lot of things are, probably some of you are much more technologically advanced. I'm saying, but at the end of the day, the point is that we should have sufficient documentation. I repeat, sufficient documentation in terms of quality and quantity to establish that every audit, all the audits that we have done has been done in accordance with standards on auditing. I need to mute for a second. Chairman, hope I'm back.
Yes.
Yes.
Continue. Yes.
Is George there? Secretary, you are there?
Yes.
Say 230 on the documentation part of it is very, very important. The audit, because as chairman of SIRC last year, I was seeing a lot of our members coming up for disciplinary proceedings. And when we are not supposed to officially interact with them, but they are seen as, seen differently. So they said, but still offline, when you interact, see someone in the yard or somewhere, we discuss the lot of issues with documentation. We are not able to produce the papers which they are asking for. But these kind of issues can be a big problem. So documentation one has to be extremely careful of, aware of. Can others mute, please? There is some background noise coming up. The auditor's responsibility is relating to fraud in an audit of financial statements. Today we have fraudsters everywhere, so one has to be extremely careful in dealing with this kind of situations. So if you smell the fraud, if during an audit verification, if there is a likelihood of smell of fraud, then the standard says the auditor should go deeper and deeper until he is either able to confirm the fraud or to dispel the doubt. It was only a kind of a doubt that there was a fraud, but it's not fraud. And reported fraud case, today under 143(12) of the Companies Act, we have a separate requirement to report fraud. And the penal consequence for not reporting it. So one has to be extremely careful about this. 250 is the auditor's responsibilities relating to laws and regulations in an audit of financial statements. The key question which comes up here is the auditor expected to look into compliance with all the statutes that are applicable to a particular company? The answer is no. The standard says the auditor should have an awareness about and a process of verifying whether the non-compliance with certain statutes which have an impact on accounting, a big penalty possibility, or accounting and audit function, he has to be aware of, and if there is a non-compliance, yes, that has to be looked into. So that is SA 250. But then today, there could be disputed cases, pending litigation, all that probably we take a little passive view, get detailed documentation about it. SA 501 also requires that. Audit evidence, additional considerations for specific items requires that. 260 is where, as I mentioned earlier, in the first one of the few slides where we said, evaluating the internal controls and communicating with those charged with governance. The short form they use is TCWG, those charged with governance. We need to, when we do a statutory audit, it's not just internal audit, we give a detailed report. Even during the course of a statutory audit, you come across shortcomings. Quality of people, MIS, no backups, basic controls, internal control, a lot of things today. We see not approving vouchers, cash payments, all those things, lack of control, supervision. All these things today, we have so much of technology there everywhere. So many of the managements are very passive. I've seen companies where there is a total absence of management. Employees go haywire the way they want, even in very sensitive, where they have sensitive products, at delivery points, at resistance points, there are no cameras, all those things. This can be highlighted because this has got some value addition, plus this is a mandatory requirement. And here the requirement is particularly with reference to accounting and financial controls. 299 is responsibility of joint auditors. Many of us here are not part of joint audits. Today, there's a joint audit. There has to be a clear sitting and a clear understanding between the 2 or 3 joint auditors, allocation of work properly, and then avoiding duplication, clash of work, and ultimately some kind of a consensus on reporting. But the joint auditors do not have to give the same opinion. One can go for a disclaimer, one can go for a clean report. This is how it can happen. So that has to be, to the extent possible, edged out. Otherwise, this is what SA 299 is about. SA 300 is a very, very important standard. Very important standard. Planning on audit of financial statements. This is something which is lacking, and as I mentioned earlier, audit program emanates from this standard, SA 300. How many of us have an audit program, a written audit program? Today, if you want to do it, downloads are possible. I can share an audit program with any of you. It's not absolutely not a problem. A written manual, how to do an audit, particularly when the senior chartered accountant is not able to involve. For the juniors, the less trained people, we must have an audit program. So the action point here is yes, for the major audits at least, I will have an audit program in place. Right from the appointment, the board resolution, the general body resolutions, appointment letter, letter of engagement, getting letter of representations, not there, here. SA 300 is very, very important. So the action point is to have an audit program. SA 315 is a very important standard. This is separately highlighted in the COVID publications of the Institute. Identifying and assessing the risk of material misstatement through understanding the entity and its environment. Do we really take time to understand? In our audit program, there is a note which says that, prepare a general note on the business of the entity. Prepare a general note on the business of the entity. So when they start doing this, many of the things, an audit program which we use for, let's say, a manufacturing company cannot fit into, can we use the same audit program for, let's say, Eastern Condiments and Geojit or Vigard or Geojit? Absolutely not, because the audit considerations in Geojit, which is India's first, proudly first internet banker, internet stockbroker, are completely different from the accounting methodologies, the controls which are to be exercised, the business model, everything is completely different from a manufacturing entity. So therefore, the audit program cannot remain there, which prepared 10 years back cannot be the same, and it cannot be universally applicable for all companies. A fit-all kind of an audit program is not possible. Every audit, this may have to be customized. But manufacturing, by and large, yes. Trading, by and large, yes. Financial services, yes. Like that, we have to have separate audit programs. And periodically, this has to be updated. For example, then last year for listed companies, KAMK, Key Audit Matters, SCAM, SS701. So should we not have that kind of something included? Some new accounting standard is coming. And from accounting standard, one of our clients is now required to prepare financial statements under Ind AS. Phenomenal changes will happen completely in that. So the audit should also make sure that the indices are complied with. We'll see that as we go by. So this is the importance of SA 300. Action point is, yes, let me have an audit program. I've finished that. Identifying, assessing risk of material misstatement, understanding the entity. Many of our people do not have proper understanding of the entity. I remember one of our past Central Council members, once when he came here, he was in light vein slightly, maybe it's slightly exaggerated. He was talking about the importance of knowledge of business. So in Bangalore, chartered accountant asked two of his assistants to go do an audit of a particular company. And the students asked him, what should we do, sir? He said, today you do vouching. Which all months? This is also part of audit sampling. When we come to that, we'll discuss. Which all months you do one thing, you do, it's judgment sampling. All of us do this. You do August and November. And the boys go out and come back after 1 hour saying, what happened? So we finished audits. We finished vouching. Why? Because there are no vouchers in August and November. This happened to be a mango pulp company where, the mango season is over and it is 6 months off season. Therefore, this kind of, exaggerated slightly, but then this sends a message saying that unless we have a proper understanding of the entity, and if you remember, we had a separate standard called knowledge of business, which is now integrated with this entity-specific knowledge, industry-specific knowledge, and also an understanding of the economic environment in which we work. Today, we know what's happening in the economy. In the Indian economy, the global economy, which is about 70 to 73 trillion US dollars, is expected to shrink 30 to 40%. India is going to do a negative GDP growth. So this can happen because 3 months of the Indian economy is roughly 3 trillion. So if you look at 1 month of it, it's about 250 billion. So 3 months of non-activity, 2 months of non-activity, we talk about 500 billion US dollars, which is happening in our country. So this is affected. Take, for example, many of us have our clients in the tourism sector. The season is gone. The summer season, the holidays are gone, and therefore major hit they would have taken. Some of them may not be able to reopen and go on. Huge amount of loans would have accumulated. Moratorium is only for EMI payments. Interest will still accumulate. On Monday, we are having a program as a KMA treasurer. I'm doing a presentation for KMA members on MSME schemes and benefits. But unfortunately, not finding fault with what the government has made a lot of announcements, but it's not really percolated down. Day before yesterday, a finance minister had a meeting with the bankers. The bankers to come forward and help 20% automatic emergency credit, guaranteed credit of 20% on the outstanding. It's not happening. New generation banks are saying that we still do not have instructions. The client of ours, he tried and said, Canara Bank has accepted, others saying that we have no instructions. So let us not stray from the point here. So understanding the entity, I was straying from the point of having an understanding of the economic environment. You can have a saying on inventory valuation, asset valuation, goodwill, all those things. Perpetuity of business today. Perpetuity of business is today a big question. When we do business valuations, we talk about terminal value of a business, thinking that the business would indefinitely go into the future. But many of the businesses we have seen in the past, today they are non-existent businesses. Fortune 500 companies, the other day I was just reading an article. Fortune 500 started somewhere in the 1950s. But of the Fortune 500, only 50 or 55 are there in the list now. because other 454, 450 new companies have come in. The original 450 are somewhere withered out, fallen off, or merged or whatever. So dynamic is a business environment. One has to be clear about entity-specific information, industry-specific, and general business about this. SA 500, very, very important standard. Audit evidence. SA 200, the first standard we did discuss about, says the auditor should collect sufficient appropriate evidence to make assertions on financial information. Sufficiency talks about the quantity of evidence. Sufficient appropriate evidence, appropriateness talks about the relevance of evidence. Are we collecting enough quantity of relevant evidence? It is not having three thick box files. It should have a relevant content. So audit evidence we should collect wherever possible, and based on that we have to do the documentation. All those things are very, very important. We don't have to explain that much on this. Audit evidence additional concern. 501 is a logical extension of 500. Additional considerations for specific items mainly deal with inventories. The standard says that the auditor should be physically present or be there through a responsible assistant to oversee. We don't have to do the weighing or counting and all that. You have to be there. Make sure that the management has put responsible people in there, and a stock verification actually happens. But this year, what is the scene? 31st March, we were all locked down. We're all locked up. So we're coming on to that with institutes level of publications which are coming. How we have to do either a work back or something of that sort has to be done. And also the fact that many of the perishable commodities or pharma items like where expiry dates have applicable would have become completely obsolete and of zero value. So inventory valuation, subsequent events, also we'll have to see. We'll come to that a little later. Another area is the segment reporting, SF501 segment reporting, and also the legal disputes and contingencies which can arise out of that is what is discussed in SF501. 505 external confirmations. These are all used to be good practices, but today we take it for granted, even without getting a bank statement. We know what happened in Satyam. In Satyam, even the bank statements were cooked. So this is not the real bank statement. Fake bank statements were produced. So today, many of the larger firms take confirmations directly from bankers. Let me also tell you that confirmation should not be confined to just bank balance. Debtors, creditors, then documents. If one says that the original of the staff, the sale deed is with the bank, let's get a confirmation from the bank. If somebody says that my stock is with my job worker or subcontractor, so much of my material worth, let's say 2 crores as on 31st March in progress with my subcontractor, we must get a certificate of balances, certificate of materials and stock, agents, sale or returned agents and so on. Thirdly, certificate of confirmation of documents, original documents held by bankers and lenders. This is very, very important. 510, I did mention initial audit engagements, opening balances. When we get an audit take up an audit for the first time, which is done by somebody else, we should make sure that everything is there. The land is there. Let's say land, there's an opening debit balance of 12 crores. Get the breakup of that. If there's a fixed assets register, today some of them have only Excel sheets. Look at the original documents. If original documents are there, make sure that they are in the name of the company. In CARA, one of the important reporting points is that all the title deeds, ownership deeds of immobile property are in the name of the company. 3 years back, we did an investigation for the official liquidator of a company which all of you know, which was audited by Chartered Account in Cochin, and where we found that 18 of the immobile property, the company went into all kinds of trouble, and the 18 of the immobile properties were not in the name of the company. It was in the name of the managing director, but still happily sitting in the balance sheet of the company. On the other side is the promoter's contribution. So that's why they have said that all these things have to be properly verified. SF 520 is about analytical procedure. Why this has happened? We had a case where we found that in an industry which is using natural rubber, about 60% of the raw material was natural rubber, in spite of having a reduction in the raw material prices. That year, all of that year, the natural rubber price was lying low. In spite of that, the GP came down by 10%. That investigation resulted in some finding, which is not possible even if you had done 100% vouching of purchases, stock verification. It was a cooked up Excel sheet manipulation in the stock valuation. So such things can happen. SA 530 is audit sampling. The standard in brief says that the auditor should do, in a large audit, for example, if you're doing a large audit, where we have the universe is 12 months if you take the period as, or 1 year which is divided into 12 months, or 20,000 vouchers. So it says that you should do sampling sensibly to make sure that what you pick up, because none of us are going for 100% verification. If there is an internal audit, internal control, maybe we do only 20-25%, sometimes even less. So how do we pick that 10% has to be rationally picked up. It says that it's the randomness of the sample selection has to be ensured. And because they say that your sample selection process should be defensible. I did mention earlier that it is not very litigative in our country, whereas outside. So how have you done the audit? Have you selected the sample? Compares this situation with the Bangalore example where 2 wrong months were selected and saying that 20% vouching or probably 2 by 12% was vouching was done. No voucher was ever seen. So audit sampling has to be sensible. They use random number tables in sample selections. Let me confess this one standard where I am not fully following, but we have some way of ensuring randomness, like taking lots and all that for months, and not just judgment sampling. And every year this is changed. Every year this is changed in repetitive audit. So I think the lot of scope of improvement here with me as well. Audit sampling, larger audits, we have to be careful in selecting the sample. Randomness, sampling, what's the most important attribute which is recorded in any sampling process? Every unit of the population, every sample, every unit of the population should have an equal chance of getting picked up. And here we also talk about stratification. I did talk about 18,000 vouchers. Of the 18,000 vouchers, low value vouchers of value more than, let's say, 50,000 or 1 lakh. Then vouchers less than value of 5,000, leave it out. They are in large numbers, then no point in wasting time, because materiality also today is very, very important. Yes, sir, 550 related parties. Related party transactions are seen with a lot of suspicion, like cash transactions today. Related party transactions and the Companies Act, a lot of restrictions. 188 puts a lot of restrictions on related party transactions. Income Tax Act, 48(2)(b). Accounting Standard 18 says that all related party transactions have to be identified and disclosed in the notes on accounts. Not only transactions, the balance outstanding. One danger which today many of us expose clients to rather is that there are huge debit balances in directors' accounts. Profit-making companies also run a risk of being caught under 222E deemed dividend. I'm not a tax person, but today I was told that the department has a system of browsing, flipping through the balance sheets filed, and if there's a debit balance in directors' accounts, 222E, they are sending notice. That's not related to this. So related party transactions, SF 550 says that we should get a separate letter of representation from the management listing out. In Companies Act 189, register has to be verified. In smaller companies, this may not be possible. So we ask them to complete transactions and then give it in writing or in the letter of representation. We insist on getting this. 560 is subsequent events. AS4, Accounting Standard 4, let me take a flip back to accounting standards. AS4 is contingencies and events occurring after the balance sheet date, of which contingencies have been chopped off fully. It is in AS29 now. So that one is now events occurring after the balance sheet date. The term internationally used is subsequent events. Events occurring after the balance sheet date, but before the balance sheet is approved by the board and signed by us. Lot of subsequent events. Now, March 21st only we went into lockdown. 21st, right? 21st we went into lockdown. All of April we were locked in. Whole of India did not sell a single vehicle in April. All businesses had come to a grinding halt. All resorts were closed. No restaurants could be opened. No flights could be. The estimated loss to the aviation industry is every industry. Aviation is so much because they are already in trouble. Well-doing airline companies like Indigo posted a loss of about 250 crores plus in Q4. I think substantially more. The net loss, the loss was almost Q3 was almost wiping off the profits of the first 3 quarters. So these subsequent events, what is their impact on the financial position as on 31st March? Adjusting events, debtors would not be recoverable. Inventories may not have the realizable value which they had on 31st March. So NRV has to be substantially reviewed. Fixed assets, some of them would have rested and gone. We know what happened in Vizag, unfortunately, when the factory was reopened after the lockdown. Some of the ingredients, raw materials had turned inflammable, and we lost so many lives there, very unfortunately. So all these things have to be carefully seen in evaluating. So not only seeing that, we always used to flip through next, if you're doing the audit now, April, May vouchers and transactions we run through to make sure that something which is relating to the year which we are auditing, 1920, has not fallen over and not got captured in 1920. So that's the spirit of checking all those subsequent transactions. Even in bank reconciliation statements, the outstanding items, we see that whether after 2 months, checks issued not presented, checks deposited not credited, something suspicious could have been there. All those things have to be careful. That is about subsequent events. 580 written representations. My dear colleagues, we are not taking many of us are not taking this letter of representation from the management. All the explanations orally given are highly volatile. In politics, they say, I deny, or I was misinterpreted. This can happen with the management also. So what are the assertions, doubts which we have, particularly in KAM discussions, key audit matters? I'll come to that a little later. We're almost there. Get written representations on all that is relevant. That all the liabilities have been provided for, all the bank accounts have been discussed and disclosed to the auditor. N number, you have the format there. Have a look at the appendix. The formats can be shared, letter of engagement, the letter of representation. In case you need a blank format, I can share. But surely, that's an easy way of doing it. But let's do some more learning, some more reading of all these things, because these are the basics. If chartered accounts are interchangeably called as auditors, the other works which we do, unfortunately, we are getting into a lot of clerical work. GST returns, 2B, 2A, 3B and all that. The first generation chartered accountants were pundits. Today, many of us are reducing ourselves to clients, clerks. There could be a separate division of things which are completely different or can be outsourced. But I'm seeing a lot of chartered accountants, the time which they spend on reading, on health with family is very minimum, and working late into the night for the clients. I think it's high time that we become a little less concerned about the client's work, not about the client. I was always trained about a detached attachment with the client. Detached attachment with the client. So this is very important that we get written representation. SA 16 talks about how the external auditor, the statutory auditor, should make use of and to what extent he can rely on the internal auditors. The crux is that the fact that there is an internal audit or the internal auditor has covered certain areas does not obviate the responsibility of the statutory auditor. He's still responsible for his opinion. The fact that the internal audit is there is only giving additional comfort to the statutory auditor. And again, the internal auditor in turn is expected to share his reports with the statutory auditor. Of course, informing the management. Because the particularly in the internal financial control reporting, it is not internal financial controls, it's ICOFR, the institute said, internal controls or financial reporting. While we're reporting on that, the internal audit quality also should be subjected to a review. Now, the next important, a very important standard is SS 700. This is about the auditor's report. Forming an opinion and reporting on financial statements. SS 700 was revised 2 years back. I have made a tabular comparison of the revised standard and the old standard. The revised standard, the title, auditor's report, independent auditor's report, addressing, opinion. Straight away it's going to the opinion. What is the opinion? So and so. It's like opining about a person. We get these kind of questions from sometimes a friend calls and says, ask for opinion about a boy or a girl who did this articles here, her articles here. He says that our boy is wonderful. Good, go ahead. A clean report. 2 is that except for, earlier on we used to say subject to. Today the terminology is except for that he is a loner, he is not a team player, he is heavy, as a heavy smoker, etc., you may consider. That's a qualified opinion. The third type is no way, he cannot be. He cannot be a part of your team, or he cannot be the boy for your daughter. No way. The third one is, boss, sorry, I don't want to give an opinion. Better ask someone else. It's a disclaimer. XYZ could be the reasons. So, and then we give the basis for opinion. And going concern, particularly in the situation where we are discussing in this Zoom meeting today, going concern is a big concern. Conventionally, we are trained and we are taught that going concern is an accounting assumption, not a safe assumption anymore. Going concern, one is going concern at the scale of operations which the entity continued to. Or today, one may have to substantially scale down the operations, and the optimism has faded out. Lot of skepticism, lot of fear about how the future is going to work, or how long is the dark tunnel we are all in. When will we see the light, the bright light, or at least some dim light, so that I can get started? Or what will be my business? We have a client who is leased out his entire resort to a well-known group in Kerala. So when this came, this group has got good knowledge of tourism. They made an assessment and they immediately wrote a letter to this client saying that the minimum rent clause has to be suspended till September 30th. September 30th was probably a guesstimate at that point of time. When will the vaccine come? When will the world go to normalcy? Surprisingly, we see that China has gone into normalcy. I don't know how. And Wuhan is now working overtime. While we are still concerned about the community spreading and things like that. A lot of stories behind that. Let us not get in there. So going concern is, when going concern is a doubt, the issue is, it's that not only your current assets, even your long-term assets, property, plant and equipment may have to be written down to realizable value, because you're going to sell lock, stock and barrel. Liabilities may not, some of the liabilities may be waived. The bank might come for no one-time settlement. Then they may have to be written down, written back. All these things are very important. Key audit matters, I did mention this is a new standard, SS 701, key audit matters, which came in last year, mandatory for listed companies. And the standard also says, and in situations where the auditor feels it is really warranted. Really warranted. So unlisted companies, strictly speaking, there is no applicability. And what is this key audit matter? Key audit matter are important matters discussed during the course of an audit. Something like an audit concern. Why is it like this? Oh my God, kind of OMG kind of situation. Then the management comes out with maintainable explanations, a realistic explanation. Like when we go for a bank audit, on the face of it, an account is an NPA. But due to subsequent behavior or something, some good development which has happened with that particular constituent, otherwise which would have been an NPA, not even a substandard, a loss asset, probably we would classify as standard, because there are convincing aspects which we need to document. That's very important. 230 document, very important. So then the auditor says that yes, So if you have seen some of the listed company auditors report last year, there's a new head, and in a vertical tabular form, many of the larger firms we have given the key audit matter, and then the auditors, how the auditors address the key audit matter in a tabular form. So I think all of us should start this good practice of referring to annual reports. It's just a click away, just download. If you want to see the annual report of Infosys 1920, it's just 2 clicks away. Aditya Birla Group, they have good reporting practices. Infosys used to get the best presented accounts awards and all that. So corporate presentations today, one very important thing is that we need to, if you need to change, we need to change. Yesterday, I'll share with you one example. Yesterday, we just came across this thing which we were not following. It's a guidance for non-audit assurance engagement, where say that we issue a lot of certificates, where we start by saying that we have examined the books of accounts or relevant records produced by so and so, and explanations given. Based on that, we say that the records last 3 years audited accounts, and say that the certificate, the turnover of the company, we do turnover certification or investment in fixed assets. But we found that another firm starts that by saying that we have been engaged by such and such company, wide a letter dated or email dated. I don't know, that can be a WhatsApp dated, because all of you know I'm not on social media. So by email dated. So let there be an engagement from somebody else. Just because an accountant calls and says that, sir, we need a turnover certificate, let us not take our pen and start typing on this thing or engaging somebody to do that. So let there be some more kind of a documentation. We immediately said, let's put that into place. We are doing it, yes. Then it talks about management responsibility. Management is primarily responsible for financial statements, which we are getting it acknowledged in the letter of representation, including compliance with accounting standards. Though we are helping them in preparing financial statements, many of us have to do that, smaller companies. Why smaller companies? Even listed companies, with due respect to my friends in the corporates, many of them are not able to prepare a financial statement, Schedule 3 compliant, Ind AS compliant. So it's for the auditor to do that, help them, support them. But then the responsibility is still theirs. We are only helping them. Auditor's responsibility is to do an audit, do an audit and express an opinion. For that, he has to collect evidence, he has to plan, as we have seen, the documentation, materiality levels, relevance, all that is hugely important. Other reporting responsibilities we have under the Companies Act. The doers features in the accounting function, anything that has got an impact on the financial position of the company, 143.12, fraud and so on, and CARO. CARO is coming under other reporting responsibilities. Signature, date, place, and today, most importantly, UDIN, wonderful initiative by the Institute. It insulates us from fake operators, dubious players, tax practitioners, who carry the seal and signature of a chartered accountant in the suitcase. Those guys have been chopped off. But then, still there are about 20,000 plus chartered accountants holding COP, not still registered on the portal, the UDIN portal of the Institute. Let's make it a point. Before an audit report or a certificate is printed out, the UDIN is generated, and it is OTP controlled. You have perfect control over that. And internally, the system generates a report. If not manually in Excel or something, we should maintain. So UDIN is mandatory. This is about SA 700, and the new format of the report is found as an appendix to SA 700, which can also be shared if you wish. Moving on, 701, we did discuss key audit matters. 705 is how to qualify. They call it modifications to the opinion in the auditor's report. Qualified opinion, adverse, disclaimer of opinion, modifications to the opinion in the auditor's report. 706 is emphasis of matter paragraphs and other matter paragraphs in the independent auditor's report. Emphasis of matter is something which requires the attention of the auditor, or the process feels that it should be brought to the information of the users, but it is not as intense or grave to warrant a qualification. So one step less than a qualification, but it essentially finds a place in the emphasis of matter paragraph in the auditor's report. concludes by saying, however, our opinion in this matter is not, our opinion is not qualified in this matter. Emphasis of matter paragraph. This is being extensively used. Managers may refuse. Yesterday, we signed a balance sheet, which is a part of a listed group of companies where we said that, yes, emphasis of matter in relation to certain controls, the controls over certain assets and protocols. There's some resistance, then we said, no, this has to be there. And given an assurance that before the next quarter close, maybe too close because we were not there for 2 months, corrective actions taken by the management. Yesterday, we had the audit committee meeting. Intellectual interactions have to happen. The auditor should not confine himself to the accountant's level. He should have access to the board of directors. They're not divine. In fact, we are above them. So that I'm not saying that who is big or who is small. We should not confine to that level. Our level has to be essential. We should have put ourselves on a higher pedestal. Only then things will change. I had a friend who called up and said that the police is not treating me well during this thing and all that. For that, you have to be really confident about yourself, attire yourself properly. You should look like a professional, behave like a professional. Same is the case in audit situation. These are the COVID-related pronouncements of ICAI. Chairman, I can share the slide with you. Those who have attended today, we have the email ID. You can share it with them. And I'm not attaching any IPR value to it. Of course, some lot of work has been done, particularly on this newly issued pronouncements, at least going through that in detail.
Definitely, we will share.
Thank you, Roger. Accounting and auditing advisory impact of coronavirus on financial reporting and auditors consideration came on 27/3. So immediately, even after the close down, I did mention about what Babu sir was mentioning, that all the council members, and he is today now chairman of the expert advisory committee. The FRRB findings, which I mentioned earlier, the second lot of findings were issued a thick booklet. You have the soft copy also. It was issued when he was the chairman. So you're saying that substantially more effective deliberations are happening. People are otherwise less, engaged. Client calls are not there. That kind of disturbances are not there. You have no meeting. You go to Delhi for a meeting or Chennai for a meeting. Evening you have probably a meeting with a friend or a client. Such things are not there. So you're fully and focused on this. I'm expecting that in here also. Now we have 75 participants with us. We had at some point of time 80, 82. And so many of them may be watching on YouTube as well. So that there is full focus on this because there's no distraction per se. Going concern, key considerations for auditors amid COVID-19, 10th May. We did discuss about the issues in going concern. Physical inventory verification. None of us could do, no managements could do physical verification on, since I've been talking for a long time, with your permission, I'll sip a cup of tea. Key audit considerations amid COVID-19, 13th March. Auditors reporting key audit considerations amid COVID-19, again 17th March. Subsequent events. We have touched upon all this. We'll have a quick look at the crux of these pronouncements. Key audit considerations amid COVID-19, 23/5. SA 315 and 320. 315, we know the identifying the risk by understanding the entity. 320 is materiality. Potential issues for entities, particularly entities that operate in geographies that are significantly affected. Also, that's possible that the vendors, bankers, suppliers, service providers, customers would have been in very badly affected places, hotspots and things like that. Auditors should evaluate additional risk arising from the following. Operational disruption. We know that in the whole of April, we are not able to move, resulting in it. But let me also tell you some of our, we have an edutech company. We have a few of our IT companies. Edutech company, in fact, their revenues were more in April. That's a company which has got about 400 plus MSc math teachers sitting in Cochin. And best thing is, they were already working from home. WFH is not new for them. They're working from home. Only of the 400, only I think less than 100 sits at their office. Rest of them are trained and then they can work from home. They're giving e-tuition to students in the US, not Indian students, American boys and girls. So their revenues, in fact, was more in the month of April, and there's absolutely no disruption. Everything is online. Even audit could be done completely online. There are QuickBooks and all that. So it's very good experience. The experience, completely different experience. So from brick and mortar kind of audit, vouching and ticking audit, it was a different experience altogether. So they were not affected, but that's not the case. I did mention about the tourism related entities, wherever travel, everything is completely down. So drop in demand, everyone knows. Reduce customer base, employee absence, public lockdown, etc. Contractual non-compliances. Today, contractual non-compliances would come. Yesterday, there was a discussion on accounting standard 16. AIS 16 says that if the development activity is suspended for a long time, capitalization should cease and the interest cost of that period should be expensed. But then they say, if it's a force majeure situation, for example, a flood or something which is beyond the control of human beings, yes, then naturally force majeure and their capitalization can still continue. You don't have to expense it saying that it is inefficiency in execution. So contractual non-compliances today have to be seen in the light of whether, yes, the parties to the contract is agreeing to, yes, this is a situation I understand. Like example, when we negotiate for the rent, we are paying rent only for 20 days. April, we asked for 100% waiver. I think it's being heard. I think in Andhra government is Lulu has given some 1 month's rent was waived. I think it's not official. I've heard this, and Andhra government had done a major exercise on this. So the tenants are requesting. Then the landlord or the owner has a problem because he has EMIs to pay and so on. The story goes. So there's a moratorium. All those things. So it's all completely a chain of reaction. Is so interconnected. Liquidity and working capital issues. Liquidity is huge. Liquidity problem is huge. Working capital is not there. Receivables are not being able to be collected. You're not able to sell your inventories, and how will you pay your bank? Keep the limit within the we borrow drawing within the limit. How do you pay your suppliers? All those things are there. Asset valuation. This is huge. This is something which is of a major concern. We remember, transaction which happened before the ban on the bars came in Kerala. BAR bars came in Kerala. Some of the properties got exchanged for mind-boggling valuations. Local example I'm giving. Today, all valuations are make-believe. Valuations are overdue for a revaluation. That's what I personally and professionally feel. What happened to Kingfisher? And how do you attach a value of 1,45,000 crore to Flipkart, which has never made a profit? What will happen to the valuation of the very unrealistic valuation of Uber and related businesses? Continued assessing and revising the materiality levels. Today, scales have changed substantially. Therefore, you cannot have fixed level of materiality. This may also have to be assessed and reassessed and revised. Auditors should essentially discuss the impact of COVID-19 with those charged with governance. They may not open up because they cannot have, they will have another worry of having a very big balance sheet. Other than automatically tomorrow they want to borrow more or get an equity partner on board. All those things I would be worried. But then one has to be extremely careful. There will be a larger tendency or inclination to either to not to disclose, or what is being disclosed could be a rosy picture. Things will change. All of us have to be optimistic. We are not saying that this is not the end, this is the end of the world. But then it may take, experts feel that it may take 2021 would be a very difficult year. It may have normalcy. When will the vaccine come out? Normalcy. People, when will they start traveling? Another feeling is that Kerala, I know, sure, maybe there are members from outside Kerala also. Kerala's safe destination, which is except for the community spread, which if does not happen, at some point of time, our health minister was interviewed by Guardian, BBC and all that. K.K. Shailaja had become an icon and did a wonderful job. No doubt about it. The state government did a wonderful job. And because of our the literacy levels, and people are more listening in Kerala than other places. But that is slowly changing now. I don't know whether that can have a relapse of the whole situation. So if that happens, then people say that this would become a very sought after tourism destination, a safe place to go. So will the tourism, or rather the resorts and hotels would be able to bounce back on that kind of a ride that kind of a wave which would happen post-COVID? All those things are, these are things which we should be open to, aware of, and then not just seeing the 8 o'clock news. Specific accounting issues could be impairment of goodwill. I did mention a goodwill valuation, long-term valuation. Today, goodwill, essentially there is impairment of goodwill. Property, plant and equipment. Real estate today, if large number of IT companies are going to resorting to work from home. The other day, somebody showed me a beautiful table which is designed for work from home, the model, in a cozy corner of your house without disturbing. If you're in a small apartment, you could sit there and it's kind of self-contained. So new products are being developed to encourage. So they're working from home. What will happen to the unsold apartments in IT dominant areas? Like in Kerala, we have Info Park and Kakanad. What will happen to the high value real estate bought by builders, thinking that they would be able to sell apartments at 5,500 to 6,000 rupees a square feet? What will happen to receivables? What is the situation of our receivables? I'm coming to that a little later. One of the COVID lessons we learned is that I have always been vocal on this. I would now be louder on this, that giving undue credit to our clients. Not billing properly, collecting. If we have a receivable now, we have a problem. We did not ask when the going was good. How do you and I think that we can ask them? And if they ask them, will that be heard? Even people who have money today will take this as a shield. Loans taken and given both. Valuation of defined benefit plans. Look at that. AS 15, when it comes to that, due to changes in employee strength and devaluation of plan assets. 31st March 2020, when we get the statement from our insurer, LIC or the insurer, I'm sure that the value of plan assets would be substantially less than what is in the beginning of the year, which will make a dent on the P&L. In addition to the accruing liability of incremental accruing liability of gratuity year over year, this also will have to be leveled up. Another huge debit in the P&L can happen. Depletion in the value of plan assets. Employee termination benefits. A person who is very closely known to me, 75 of them, of the 300 employees they have in Cochin, 75 has been terminated. They're going to give them because my friend is there only for the last 1 year. So he's not eligible for retirement benefits, but they're giving a severance allowance of 4 months, which has to be accounted for, provided for, to take an accounting hit. Onerous contracts and penalties. Some of the contracts have become onerous. And if that is there, penalties, whether that would be applicable or whether that would be a waiver of all, that has to be seen. The auditor should use procedures as prescribed in SA 540. SA 540 is audit of accounting estimates, useful life of assets, realizability of debtors, so many things. Accounting 540 has to be, the applicability of 540, as I mentioned earlier, stands amplified. Other areas, physical verification, valuation of inventories other than financial statement date. Today, we are able to do it post-lockdown. April, there were no transactions. So March 31st stock and April 30th stock invariably would be the same. May, there will be transactions. So if they're able to do it, we should be able to work backward and reach the March 31st. But then there again, the physical condition, the obsolescence, like I mentioned, pharma items, if it's a pharma company, there's a cough syrup which was made in February, which is, let's say, hypothetically has got only 2.5 months of valid life. February, March, April 15th, all that is gone now. That is to be thrown in the dustbin. Disposal may be a problem. Disposal may be expensive. Real life situation we are facing, like never before. Physical verification not attended, we can do it now. Subsequent events we did mention, going concern we did mention. Auditors of internal control considerations. Of course, internal control considerations are there. Internal controls would have failed during this period, so one has to be careful. External, wherever possible today, external confirmations have to be obtained. And the fraudsters, very unfortunately, even when there's an accident, instead of saving lives, people try to steal. We have seen that. So even in this kind of difficult situations, fraudsters may lack of controls, lack of supervision, breaking into factories, or getting into information systems, using the data security concerns we did, very sensitive information, hacking and all that. Therefore, this is huge. So fraud considerations, as we have seen, the standard one has to be extremely careful in the situation. All that, the last bullet point is most important. All that has to be got returned, but that doesn't essentially save us from what we should have done. It's not a written representation, is not a substitute for evidence which should have been otherwise collected in the normal course of business. This gives additional comfort. The management is made to commit, and when it's made to write, yes, it is made to write, there will be little more of care. I remember, I think I'll take 2 minutes. This is very relevant here. As an article clerk, I was doing an audit in Bangalore. I did my articles with Varman Rama in Chennai. And that finalization, Venugopal sir came, ECG came. And we had some doubts on that particular case. So he asked for something and I said, yes, sir, we're doing it. Then he asked this particular person, I would surely like to have that in writing. Then he became jittery and he started beating around the bush. Then VCG narrated a beautiful story, which was there. I also happened to read that in the Reader's Digest of the previous month. Reader's Digest is good reading. Okay, Reader's Digest is facing bankruptcy. I think they've closed down in UK. So he said somebody was digging a small kind of a canal in a college campus. They came across a cable. And the cable had to be cut, so they were not sure whether this was live or dead. Naturally, the electrician was summoned and asked whether this is a live cable or a dead cable. He said, boss, look, it's so lying so deep, it's dead. It's dead, you go ahead, cut it. Then this guy was a little smart. He said, if you are that sure, why don't you cut it? What the electrician said, I will go switch off the mains and come back. So getting something in writing, making somebody to do makes a difference. A very relevant example for all times, for all audits, or shaky explanations one can take us for a ride with. So that wisdom has to essentially prevail. Going concern, yes, we have discussed most of the points. Look at the last 2 lines in red letters. So there is an implementation guidance to SA 540. We have a large number of IEGs, implementation guidance for going concern. So whether there's actually a real problem, going concern is at stake, difficult. Yes, then there is huge amount of considerations. I think we should go faster now. Physical verification also. 501, I did mention. Additional consideration for specific items. So this is standing amplified here. Implementation guidance one has to see. And look at the last paragraph where with all this, the auditor, unfortunately, in the given situation, he has some amount still doubts, he is not able to get satisfactory explanation, sufficient appropriate evidence, he should modify the opinion in the auditor's report in accordance with SS 705. We have discussed that already. Whether the impact of business operations, revenues, cash, it's not cash loss, it's cash flows, etc., or the entity for the year, including fair valuations, estimates, realizability, discount rates used to have been appropriately assessed by the management. Whether events occurring subsequent to the year end but before issuance of the auditor's report have been considered, subsequent events. We discussed that already. There's some kind of repetition in many of these 6 publications which we have seen. Whether appropriate disclosures have been made in the financial statements regarding the impact and management's assessment of the same, including the impact on going concern basis of accounting. So it's no more a safe assumption. That's what they're trying to say. So with that, I think topically I've finished all the points which are important from understanding standards in auditing in the light of the emerging season of 1920 audits. Quickly, 1 more minute on what I normally present when I interact with our members, brothers and sisters of our profession is quickly. This has some COVID lessons also. COVID has taught us that we should substantially leverage more on technology. When this lockdown came, we all of us had some situation where, oh my God, if I could have a, how many of us have a cloud server where data could be accessed? Is it made open to all the students and staff so that with the huge risk of data security? We need to have the required infrastructure, the hardware and the software, servers, whatnots. We should use that. I think we must gear up. People and processes, yes, I did mention, SQC1. Billing and collection. and financial planning goes together. When this 21st lockdown came, we had a few days later, we had a con call, and then later a Zoom meeting. The partner said, do we have the reserves to pull on for 2-3 months? The business is not there. Collection are not forthcoming. Luckily, we had an answer, yes. But it may not be the case everywhere. With us also, it may not be the case all the time. So one of the lessons is say that we should have some reserves. Structured firms, focus firms essentially have to have that. That is about the practice part of it. It's not just for the expenses. The stipend that we paid, March we paid the full stipend. Institute again, for information, Institute on 27th March came out, 26th March came out with a notification saying that the students' absence due to COVID cannot be taken as leave. It has to be taken as being served. But when it comes to the stipend, it could be between the employer and the employee, the student. It could be full, it could be half, it could be nil, and so on. So that is there. So April, yes, the rate was a little reduced. But then partners also need to draw money. We have, all of us have EMIs, household expenditure, kids' fees. Of course, this time it got extended a little bit. So all those things. So financial planning is very important individually. Insurance, term insurance, medical insurance, all this, we are still very, very poor at doing all that. So attitudinal change, and this is something which I cannot say now, because without social media, many of our friends are finding it difficult to stay sane. But still, I've kept off social media to the extent possible, because I think it takes a lot of trivial time. The trolls and the all those things are taking professional time, valuable time, family time, all those things. And I would also request I will urge every one of you to be more student friendly, to develop an academic culture in the firm, because they are the future of the profession. Ours is a slightly different form of a Gurukulam system, a Gurukul system which we know. We have to take care of them and make sure that they're not workers. They have come to learn and blossom forth the chartered accountants. That's the future of the profession. End of the day, when you go back home at 5:30, 6 or 6:30, not any later. In our office, it's a lights off at 6 o'clock. Very rarely, outstation students sometimes. Otherwise, there's no late sitting, there's no Sunday working. So we have to be a happy organization as we go by. So if change is essential, change is inevitable. As they say, yes, change is inevitable. We need to embrace it. So Robin Sharma famously said, all change is hard at first, messy in the middle, but gorgeous and so beautiful at the end. With that, let me conclude thanking the chairman, Roy Varghese, the entire managing committee for giving me this opportunity to revise support and also to interact with so many of the learned members of the fraternity. If we have time, we'll have a short Q&A session.
There's a tendency I see that you asked your client to get the external confirmation. I think it's a wrong thing. And the practice should be developed where you directly write to the concerned person, whether it is a creditor or a debtor. That's something that I think we should insist on, because in today's situation, maybe the owner of the business may not be involved, but since you're interacting with the accounts people, it could be something that they manage, and finally you also fall prey to that. So that was something that what is your view on that?
Mute, Jomon.
Unmute.
Yeah, you have one more question, I thought.
Actually, the question, it was more on what we face as practicing chartered accountants. One is, to start off, we have a time issue which is there. There's always the clients coming fairly late in the day with their, with their books of accounts or tally or whatever it is. So I think one of the things that we need.
There's some interruption.
Yes.
Some problem with the signal, the George.
So to that extent, we have we need to start off early. Can you all hear me?
Sure. Yes, you're audible. Please continue, sir.
Okay. And just two more points, and you please go ahead. One is, of course, as you correctly said, the audit program. I think that has to be key. And many times I've found one thing, that the audit program is not being revised.
Yeah,
You have stuff there which is actually even and it has 1956 Act stuff coming there. So I think it's important. And
I did mention that it has to be customized, not only customized, updated. I did give the example of SS7, not one and all that.
That's
Very well taken, sir. That point. I'll answer those two questions. One is about the confirmation. Two is about the clients bringing in late, which I have completely different view on. You are a guru for me, so I will still have more questions from you, and then
just the other one is that I don't know whether a lot of people are using the Tally audit tools, because a lot of our clients are using Tally. And there are actually you could have something close to about 27 Tally audit tools are there, and we have sort of listed 15 of them as mandatory across the board for all audits. It must be there, is how we have. So I think it will be useful, because anyway you are using Tally for most of 90% of the audits are Tally. So this is already there, and I think people can quickly you can close out audits much faster, because the exception reports come in very well. And
sir, so short interruption. Per se, our firm is not using any of the Tally audit tools, but Chairman, I think this is a very valid point. Sir has got that blend of technology. So in association with Tally, before this audit season itself, why don't we have a program on this Tally audit tools? They'll be happy to associate and probably give a some kind of a sponsorship also. That's very secondary. But if there are very effective tools, because majority of our trade and service clients, medium size, large, except core manufacturing companies, are in Tally. So I think that's a good thought. I'm not escaping from the other question. Please continue, sir.
That's it. The last one was on the analytics part. I think it's what our seniors and very they used to do. They used to have the P&L balance sheet in front of them, and from there, in a half an hour discussion across the table, there were lots of items which were coming out. So I think it is very essential that we do the analytics part. So that's it from my side. Thank you so much.
Thank you, sir. Let me try to answer those first two questions. One is about the circularization, or we call it as year-end confirmation of balances. The ideal practice suggested is that instead of the auditor writing directly, the ideal practice is suggested earlier on was that in physical form, when this was sent, they would give, the management would request the debtors, creditors and all that to confirm the balance with an envelope. In our days, we used to do that, an envelope addressed to the auditor, saying that this has to come to the auditor directly. And in larger audits, we used to have a file called ABC Limited Debtors Confirmations. And then this would, then later when for the audit, this would be compared and done. Today with technology, I think a CC'd email is fair enough to make sure that this kind of things can happen. But the point, I think we are on the same page, Kora sir, because when it is transmission losses can happen when it is passed through accountants and all that. Managements may also hide certain. So direct recourse to the constituents, sometimes the managements may not be comfortable. But to my knowledge, no standard mandates that also. That is, I think, going advanced one step further from what is prescribed. Ideally, if it is possible, nothing like that. That is my view on it. The second aspect is the client walking late into the office, and or probably or typically the client sometimes saying that, okay, Sare, audit on September 28th. Those who are not Malayalis, on 28th of September, because 30th September is the due date for tax filing, or October 31st. 2 days before that, turning up and saying that, sir, should we not do the audit and file the return? We have said sorry to those clients long back, and none of the clients have left for that reason. What we do is, which could be probably effective, is in the month of June or May for prompt. Some of the clients in April itself, because in listed space and all that, this has to be completed promptly. So we send something called a checklist for audit readiness. And that checklist is asked to be given back duly signed by a FM level or a general manager finance level, with the attachments, including a hard copy of the trial balance. Why not? I must sound old-fashioned. A lot of things are attached to that, and we start the audits only after that. First year there was resistance. Today our clients are used to it. So no client walks into, and we should not let the senior, we should lead by example, that no client has a freedom to call you after 8:30 unless there's a huge emergency, or 8, whatever time. For me, it is ideally 7:30 or 7:30. And on a Sunday, calling you for asking you the most complicated tax doubt over the phone, which becomes unbillable, not billable, all those things are there. So I think it's high time that the profession, individually members and the profession collectively, stop yielding to these kind of client demands. And we have been reasonably successful in that. I think my partners would vouch for it, my students would vouch for it. That kind of freedom, like it's like somebody barging into our house, saying that, hi, how are you? I would like to have a drink with you at 9:30 without notice. That cannot happen. I think slowly we can change that. A cultural change can happen. And even I used to say that when we are, in earlier days, used to sit late into the evenings in our offices, developing all kinds of health problems from ulcer to piles. Then the client would be sitting in a club, a yacht club, and this accountant would be sitting in a less expensive bar and having a time of theirs. This has to stop, sir. I said you are a guru for me. I've learned a lot from you. Not contesting or anything, but this is culture which all of us have to change. And after 6 o'clock, if there is light, my partners sit together probably just to relax and discuss. We have found a lot of success in this. I'd be very vocal on this and go on a 5-day week also. It is possible. The sky is not going to fall.
One more question, I think, from Govind. Please unmute and ask the question. Govind C.
Hi, sir.
Hi,
evening. Sir, this is regarding SA 700.
Yeah.
So SA 700, it basically states that when a law or a regulation prescribes an audit format, an audit report format, and if that format contains a certain minimum components as was given in the essay, then you need not give any reference to the essays.
Yeah.
Isn't it right?
Yeah.
So in that case, when you look at 3CA or 3CB audit reports, we are not giving
3CB is not a 3CB. Tell me, yeah.
Yeah. So these reports are prescribed by a law or regulation, right?
Yeah.
So,
Yes.
and we are not mentioning, we are not giving any reference to the essays as well.
Yes.
So would that mean essays are not applicable altogether, or?
No, it does not mean that. SA 700 says that you cannot reinvent a format for the sake of SA 700, which is prescribed by the Income Tax Act and the rules. 3CA, of course, bears reference to your company audit report. 3CA. 3CB is different, where we are, it is auditor's report. That's only auditor's report. It doesn't mean that we don't have to comply with standards in auditing. It is only, saying that SA 700 has no overriding powers over what is prescribed over statute.
All right. Sir, one more question,
please.
Now the essays, as per the essays, an audit risk is when the auditor expresses an incorrect opinion when the financial statements are materially misstated, right?
Yeah. Yes.
So, what about the reverse scenario? What if the
reverse will not happen? No, reverse will not happen because you have to give a reason. If you are qualifying, Govind cannot say that Jomon is a bad guy. Just like that. Govind will have to say Jomon is a bad guy because.
All right, I'll have
that is why the reverse is not applicable.
Okay, all right.
I hope you have made the point clear.
Yes.
The financial statements, you cannot just say because the management did not allow the increase the fees, or they did not treat you properly. You cannot say that the financial statements does not give a true and fair view. That's very clear in SS 705. A qualified opinion, adverse opinion disclaimer has to be substantiated with the reason. And today we have a separate heading for that, basis for qualified opinion, etc., etc.
Okay. Yeah, it's clear.
Yeah, I don't think you'll ever say I'm a bad boy. Please don't do that.
Yeah.
Any other questions? Any other questions?
Can I ask?
Yes, raise the question.
I'm Rajశేఖర్, sir. Good evening.
Yeah, Rajan, how are you?
Yeah, very good, sir. How are you?
Good.
Yeah. Just a very basic question. Throughout the essays, technologies like web presentation framework and compliance frameworks are used. In the case of a company audit report, the company's audit report, is it a fair presentation framework or a compliance framework?
Is it a fair presentation?
Just before that, can you just throw a little light on what is a fair presentation framework and a compliance framework? Secondly, the specific question is the audit under companies. Is it a fair presentation framework that has to be followed or a compliance framework?
No, as the name suggests, compliance framework is where the statute prescribes, like in Schedule 3 we have in India, we have Schedule 3, which is a compliance framework where the that framework. Internationally, if you see, in IFRS, sorry.
Serial number 31428.
No.
636029. Still on.
Someone is on.
Suresh Babu, mute him.
Non-interest 370 194J. Wait a second. I'm going to J.
So Rajan, that's a compliance framework. The fair presentation framework is the framework suggested by the standards. Like for example, internationally, if you look at it, when you're under IFRS, you prepare financial statements in accordance with IAS 1, which is a presentation of financial statements. So here in India, we have a combination of both, which means that the compliance framework has to be respected for the format prescribed by the Companies Act. And fair presentation network is very relevant because it talks about all those materiality, accrual, all those things, true and fair, all those things under the accounting standards. So it's a combination of that we have here.
So in the case of a non-corporate SSC, you have to perhaps follow the fair presentation framework. Is it so, or?
Yeah, in the case of a non-corporate entity, it is essentially fair presentation network. And when it comes to the accounting standards for non-corporate entities, unfortunately, we haven't heard anything from the institute in the recent past. The question is, in a tax audit of a firm, a partnership firm with 10 crores of turnover, are we expected to look into compliance with accounting standards? And if there is non-compliance, should we report or not? It is once institute clarified long back saying that if there is a compliance, non-compliance, the statute, yes, it should become part of an audit qualification. But if it is non-compliance with an accounting standard, auditor should make a reference without essentially making it a subject matter of audit qualification. So it's neither there nor here. But then we all, even at large tax audit cases, we ensure fair presentation, and there is no compliance framework there per se.
Thank you. Thank you.
Thank you.
Any other questions? I hope there is no other questions. Anyway, it was, friends, it was a very, very lucid and an excellent presentation by Jomon K.George on standards on auditing. And we hope and believe that it benefited each and every one of you. We need your comments on your observations on this, I think, and we hope to receive it. Many more, I think, around 4 more webinars are coming in this month, and every webinar will be of 2 hours each with 2 structured CPE credits. Again, I am repeating here that unless you log in and register with your real name and participate in this session, in the report which is generated to be sent to CPE credit department, your name will not be there. So kindly see that you be here, register in advance, you be here and involved in this participation. So I don't know how to thank each and every one of you, because right from the beginning till this time, of all the participants who are here, the credit goes to Jomon K.George, I believe.
Oh my God, thank you. The topic, the timing, all that is very good. If I could contribute, I'm happy, sir.
Yes. Anyway, we'll be coming with good programs, and the details will be given by the secretary. I think thanks to each and every one of you for remaining muted and not the video in off position also. That's a special thanks to each and every one of you.
Thanks for your silence.
Yeah, thank you very much, Jomon sir, for that wonderful presentation on the recent update for the standards on auditing. I think it's very much need of the hour, because we are all going for starting beginning of the audits for the 1920 and Companies Act. As per Companies Act, there is no extension so far for conducting AGM. So I think we have to, we have to, because the income tax, of course, we got the extension. So this is the right time. We have to be. It will be beneficial to all the members here. Thank you very much once again on behalf of Managing Committee of Ernakulam branch of SIRC of ICA and all the participants here extended. Great gratitude to you. Thank you, sir.
Thank you. I was told that there will be a virtual memento.
Yes, that will be discussed to you.
And thank you so much. Deepa has also come online now. Who else is there from the Managing Committee? Ranjit was there. All are there.
From the beginning itself.
We were there from the beginning itself.
Yes.
All them.
Very nice.
Because chairman asked to switch off the video, so everyone was on the mute mode.
Ranjit was there. I think all the Managing Committee members are there. Good participation. Good. I think then YouTube also, there will be people will be viewing on YouTube as well. Trichu, day before yesterday, we had one on company audit.
Friends, thank you very much for making this webinar a grand success. And before we wind up, there are 2 announcements. 2 more programs are coming up for this month. On 16/6, that is Tuesday, we have